Morning traders, Paul here with GammaEdge. Today is Friday, the 2nd of September. Let's get started. The fine print. Please pause your players, read to the bottom. If you agree, hit the play button. The summary for today is somewhat bearish, somewhat bullish. We do think the long weekend opens up the potential to continue the rise above, but just note the market model is down on short term, intermediate term, and long term. Our wing charts, which show the cumulative net negative gamma and net positive gamma, are clearly showing a downside bias. This being said, and I do include the fish pond today, for those of you in the Discord, you know what this means. The GEX ratios are becoming attractive for an upside bounce, so we want to take a look at that. That will go against the market model. That's a counter trend trade, or a CTT, as we discuss. One thing I'd like everyone to do is watch for the OI changes and look at the scales of the magnitudes of what's going in and coming out. In the Discord, use the $ OI symbol, whatever your favorite symbols are. Look for a disproportionate amount of calls and puts being added or removed. We are actually seeing a fair amount of puts going in and fewer calls going in. So that's generally, when we see something like that, just looking at puts and calls in OI, we typically are seeing more of a downside bias. You can, in that chart sequence, you will get the expiries, and so that'll be helpful to know how far out in time people are placing their bets. We do see the 4,000, 4,005 as a key area. If we gap up over that, we think it'll be absorbed, but we do think progress overhead will be difficult. We think upward toward 4105 is going to be very, very challenging. We could see this transition area of 4015 to 4105. Expect a lot of chop in this area, a lot of whipsaws, so just be aware that dealer pressure in this area above 4,000 is going to be fairly low, especially going into the 3-day weekend. Downside levels, 3,900 as negative GEX. We are seeing a growth of the 3,800 strike, and when we see that, want to watch for more short-term puts going in, the growth of the gamma down there, and potentially even more downside reversal in the deltas. So just keep that in mind. The market model, as I said, we're short, we're in cash, negative on all time frames. We're below what we call the ribbon, a fairly significant amount, and we could reverse. I don't want to say this is oversold. We have seen this many times in the past where you just continue south. A little bit of stabilization that we saw here in the cumulative tick yesterday. We haven't crossed any of the shortest term moving averages. We just use this as a kind of a guide to whether we should increase our long exposure or increase our short exposure. And you can see the last several days when we yelled about this, shorts had worked out very well. On the long-term time frame, this red line is the shortest moving average, and you can see that it's coming down below the longest moving average, which is cyan here. And when we see this is heavily back tested. This is a risk off or go short indication. So if we get any bounce to the upside, we could, one of the trajectories that we're looking at in the if then statements is that we get a reversal back down, and we would take that short position. If we were in shorts and we saw this, so if we rode this short and we didn't take these out, didn't close these, as we come up, if we do cross into this area, we would close our short positions and potentially look at going long. Key takeaway here, kind of a dangerous territory as we chop around, so just be aware that into the 3-day weekend and perhaps into next week, we could see a little bit of a rally, but where we rally and if we reverse will be very important. Taking a look at the wing charts, clearly down. This is the previous day, looking at the latest day. Combo over here, the AM settled, the PM settled. The fact that the AM settled has shifted such a dramatic amount, I think, tells us everything that we need to know. We consider the AM settled. These are the monthlies. The institutional money and We've been watching this shift for some time. This being said, I want to show everybody we are seeing an increase on the call side, right? So just be aware that short-term calls did see a significant increase, and I think that's noteworthy. Taking a look at the fish pond, which looks at our gamma ratios, you can see all these numbers below, say 0.7, 0.6. We have a few that are above, of course. But the key takeaway that I think everyone should be kind of looking at in terms of what we call the liquidity stocks, these are the top stocks of the SPX and the NAS 100. We're in this area where we want to start looking very seriously at some potential reversals. The eye is very good at seeing where we could have shorted, and perhaps now that we're in quote unquote, I hate to use this term, but oversold territory, just take a look at what we have here. So you want to look at these symbols, and if they meet your criteria, perhaps take some paper trades in those areas. Taking a look at the OI changes, this is what I was talking about earlier. Magnitude matters, so these scales, these major divisions, you can see are different on the call side than the put side. This is the most recent trading day, 2 days ago, 3 days ago. And the distribution of change in calls and puts, I think, is important. In the Discord, you can interact with these charts using that OI command. Click in there and hover your cursor over different things and see things. I think the key takeaway is that we are seeing a lot more puts going in, and when we look at the relative magnitudes here, we can see that the bets are down to the downside, not to the upside. So right now, our bias is that the market is going to be adding downside protection on any rally. When we take a look at the key levels, a lot of red across the board. Note the elevated expected move for today. This is the worst case or most conservative value that we have. This is up about a full percentage point over what we've seen this week. So we think that's probably in view of the jobs report and things that are associated with that. Remember, volatility cuts both ways. This could be to the upside or it could be to the downside. Key levels that we're watching, again, that 4,000 level, 4,005 is the JPM strike, 4050 on the PMs. This is the PM settled, the dailies over here, whereas this is the combo. Note that 4050 level right here, and then there really isn't anything above that. We're stuck in transition up to about 4105 or so, and you'll see that here. On the 0 DTE, we closed overnight right at a transition point. We've got a lot of negative deltas over us, so a lot of put dominated deltas which are in the money, so that'll be very, very important. I think closing above the 4020 level, if we gap up on the open, we'll have to watch it, but you can see the magnitudes. There are some very weak numbers in here, and if we see calls go in, this could flip. Positive gamma on this side, negative gamma over here. We've got a very mixed picture below us. So we're watching this picture. The 0 DTE pressure on today, we think, is going to be fairly insignificant, fairly weak, and so we're not watching this as much as maybe some other folks are. The combo, sea of red above us. We've got a fairly strong level here at 4,000, 4,005, which is the JPM September short call legs. COI, POI, very dominant. These are very illiquid for the most part. These have been here structurally for months and haven't really changed. So if we gap up and push up into this area, you can see some weakness. If we start seeing in the analysis over the weekend and into next week, if we start seeing green start to appear, obviously calls are going in and puts are coming out, etc. I want to highlight this 4100 level, fairly significant. We got a lot of deltas to absorb on the way up there. I just think it will be very, very difficult today to push aggressively to the north. That 4105 becomes really the last line in the sand of the upper transition. You'll see that on the next slide. To the downside, 3,900 I think is a key level. Of course, we're calling that negative GEX right now. Note the wishy-washy nature below us. We've got sign changes, so these deltas are back and forth. A lot of hiding places, pressure on the dealers as we drop through this area. No real big numbers that you see here except for this negative delta here at 3,900. No real big numbers here, and when we see that, not a lot going on. So we do think in terms of gamma, this 3940 level could open the door to slipping below. So if we do push lower, we could see a test of 3,900 again pretty easily. I don't think we're going to drop much below that because there's enough noise here in the deltas, and you can see that we've got some fairly significant gamma levels down here. So the key takeaway, structure's really squirrely. It's not supportive to an aggressive move upward. It's not not a lot of resistance below us. My bias needle hence is a little more to the downside on the longer term. Shorter term, yeah, sure, we may rally into the 3-day weekend, where everyone's trying to put trades on to take advantage of the holiday. Taking a look at the overall structure, I think the key takeaway is effectively we've got this 4,300, this is plus GEX, we've got 3,900 is negative GEX. You can see the development of the 38 line, 3,800 strike line, and that's becoming significant relative to the 39. So here we are, we're up in this zone, and yet we're seeing the 38 develop. Remember, gamma is spot price sensitive, and when we see that type of behavior, that tells us that we've got shorter term puts going in on a structure, and we want to pay attention to that. So taking a look at some downside put spreads as debits, could be with some time on them, give yourself a little bit of wiggle room. Could be a good strategy, and then perhaps paying for it by selling something up here if you can might be a good way to start thinking about those paper trades, of course. Transition is that 4,015 to 4,005 zone, maybe 4010, whatever. You see what's happening here. We've got this back, forth in terms of gamma. A lot of places to hide. Dealer pressure is going to be insignificant. And when you couple this with the delta picture from the previous picture, you can see kind of why we're not very supportive of a rapid push higher, or potentially we could move back down and see this retest of 39. So just keep all that in mind. So that's it for today. If you are interested, we certainly would welcome you into the Discord. A lot of great traders, all experience levels from beginners to professional. Really great group of individuals, and it's a privilege to be able to work with them. To do that, go to GammaEdge.us, which you see here on the screen. Click the pricing tab, fill out the form, and that'll get you in. 14-day free trial, all the tools turned on, no risk to you, of course, and would urge everyone to at least come kick the tires, give us some feedback. On Twitter, we ask that you follow us, so GammaEdges with the S, and then here on YouTube, of course. If you like today's content, let me know. Smash that like button, please. Let me know I'm on the right track and providing what you guys are asking for. And of course, follow us so you can get notified next time myself, Taylor, Michael post a video within the channel. So with that, I wish everyone a great weekend. Weekend well. Be safe. Enjoy the break. Clear your head. Come back next week for a really good review and more market action. Take care, everyone.